What if a single licensing deal could detonate a shockwave across the defense sector, and most retail investors don't even know it happened yet? Quantum Cyber just licensed its quantum antenna technology to drone manufacturers. That's not a rumor, that's not hype. That's a signed agreement with massive implications for the stock market, for defense ETFs, and for anyone watching where the next wave of S&P 500 gains might actually come from. Pay attention. This one matters. In this video, you'll discover exactly what Quantum Cyber's quantum antenna licensing deal means for investors, how it connects to broader trends in defense spending and interest rates, which ETFs stand to benefit most, and what you should be thinking about before you make any move. We're going to break this down with data, with context, and with the kind of clarity that most financial media simply doesn't give you. Let's get into it. First, let's understand what quantum antenna technology actually is, and why drones change the game entirely. Traditional drone communication relies on radio frequency systems that are vulnerable to jamming, interception, and signal degradation over distance. Quantum antenna technology operates on principles of quantum entanglement and quantum signal coherence, enabling communication that is theoretically unjammable and far more precise. For military drones, surveillance platforms, and autonomous logistics vehicles, that's not a feature, it's a revolution. The global drone market was valued at approximately $30.6 billion in 2023. It is projected to reach $95.4 billion by 2030. That's a compound annual growth rate of nearly 17.6%. Quantum Cyber, by licensing into this space now, is planting a flag at the base camp of an enormous mountain. Timing is everything in investing. Now let's talk about what a licensing deal actually means for a company's financial profile, because this is where stock market dynamics get interesting. When a technology company licenses intellectual property rather than manufacturing products itself, it creates a high-margin, low-overhead revenue stream. Licensing royalties can carry gross margins of 80 to 95%. Compare that to hardware manufacturing, which typically runs margins of 20 to 40%. That structure is extraordinarily attractive to institutional investors, hedge funds, and the algorithmic trading systems that increasingly drive S&P 500 price action. When Wall Street sees a small or mid-cap company lock in a licensing agreement with recurring royalty potential, re-rating happens fast. The stock can move before most individual investors even read the headline. That is the window you need to understand. Let's connect this to the broader macro environment, because Federal Reserve policy and interest rates directly shape how growth stocks and speculative tech names are valued. The Federal Reserve has held rates in a restrictive range, with the federal funds rate target sitting between 5.25% and 5.5% for an extended period. High interest rates compress the present value of future cash flows. That means growth companies, especially early-stage tech firms, get punished in high-rate environments because their earnings are weighted toward the future. Here's the pivot. Markets are currently pricing in Federal Reserve rate cuts beginning in 2024 and extending through 2024. As rates fall, the discount rate applied to future earnings drops with them. That mechanically increases the valuation of technology companies with long-duration growth stories. Quantum Cyber's licensing model, with its royalty streams projected years into the future, becomes significantly more valuable in a falling rate environment. The macro wind is shifting, and it's shifting in favor of exactly this type of play. So which ETFs give you exposure to this trend without concentrating all your risk in a single name? 3 categories deserve your attention. Defense and aerospace ETFs, such as ITA, the iShares U.S. Aerospace and Defense ETF, hold broad exposure to the companies most likely to integrate quantum antenna technology into their drone programs. ITA has delivered a 5-year return of approximately 78% as of recent data. Next, look at emerging technology ETFs that capture quantum computing and advanced communications themes. Finally, small and mid-cap growth ETFs can provide blended exposure if Quantum Cyber itself falls into that market cap tier. Diversification across these categories lets you participate in the upside while managing the very real risk that any single company's licensing deal takes longer to monetize than the market expects. Spread your bets intelligently. Risk is real, and you need to hear it stated plainly. Quantum technology licensing deals are complex. Revenue recognition can be delayed. Defense contracts face regulatory hurdles, export controls, and geopolitical variables that no analyst model fully captures. If the Federal Reserve delays rate cuts or reverses course due to persistent inflation, the growth premium on names like Quantum Cyber compresses again. The S&P 500 itself has historically corrected 10% or more at least once per year on average. Volatility is not the exception, it is the rule. Position sizing matters. Never allocate more to a single speculative position than you can afford to see drop 50% without it derailing your broader financial plan. Conviction is good, recklessness is not. Know the difference. This video is for educational purposes only and is not financial advice. Always consult a licensed financial advisor before investing. Here is the bottom line. Quantum Cyber's quantum antenna licensing deal for drones sits at the intersection of three powerful forces: a defense sector flush with government spending, a drone market growing at nearly 18% annually, and a Federal Reserve cycle that is turning in favor of long-duration growth assets. The smart money watches deals like this early. The question is whether you act on information with discipline and a plan, or whether you react to price action after the move has already happened. The best investors position before the crowd arrives. If this breakdown gave you an edge today, hit the like button right now. It tells the algorithm this content is worth sharing, and it helps us keep producing research-grade analysis for free. Subscribe to YieldWire so you never miss a deep dive like this one, and check the description below. We've linked our recommended brokerage and ETF screening tools, so you can start building your watch list today. The next deal is already being signed somewhere. Make sure you're ready for it.